Opendoor stock finished Wednesday's regular session at $8.06 per share, up 9 cents, or just over 1.1%. The stock reached an intraday high of $8.80 before settling back. In the aftermarket session, the shares posted a modest 1-cent gain. On the surface, these may appear to be small moves. However, they are occurring against a backdrop of important strategic developments at the company and growing external validation from respected operators and investors. Today's focus is not only the price action but also the launch of Opendoor's new buyer program in Dallas and the public endorsement it received from former Twitter Chief Operating Officer Bane. These factors together paint a picture of a company steadily reshaping its business model, strengthening its leadership narrative, and positioning itself as a customer-first growth platform rather than just a home-flipping intermediary. Let's break down what happened, why it matters for shareholders, and what it might signal for the stock in the weeks ahead. During Wednesday's session, Opendoor traded as high as $8.80. That intraday strength is notable because it shows buyers stepping in above the $8 level that has been a psychological line in recent weeks. The close at $8.06, up 1.1%, marks the third time in the past several sessions that Opendoor has ended the day in positive territory despite a choppy broader market. In thin aftermarket trading, the stock added another cent. While that is not a dramatic move, it indicates there was no immediate profit-taking after the regular session and that investors remain comfortable holding positions overnight. For a stock like Opendoor, which has experienced significant volatility and skepticism in the past, maintaining gains after a headline announcement is as important as the initial pop. It shows that the market is digesting the news, not simply selling the rip. This sets the stage for a potentially stronger trend if execution continues. The real headline today is Opendoor's pilot program in Dallas. The company announced two major features designed to reduce buyer anxiety: a 7-day test drive and a 100-day home warranty. In practice, this means potential buyers can move into a home for a week before committing to the purchase. If the house, neighborhood, or conditions don't meet expectations, they can walk away. On top of that, buyers receive a 100-day warranty for added protection and peace of mind. This is a radical departure from the traditional home buying experience. Historically, real estate transactions are high stakes, high friction, and largely irreversible once the papers are signed. Even with inspections and contingencies, buyers often discover issues only after moving in. Opendoor's approach directly addresses that pain point. By offering a test drive and warranty, Opendoor is removing two of the biggest barriers to purchase: uncertainty and fear. In doing so, it is creating a differentiated value proposition that other brokers and iBuyers do not currently offer. This is not just a marketing gimmick, it is a structural change in the customer journey. If the Dallas pilot proves successful, it could be rolled out to other markets, creating a competitive moat and brand identity around trust and transparency. The Dallas launch received an unexpected but powerful boost from Bane, the former chief operating officer of Twitter and now a well-known investor and board member across multiple tech companies. Bane posted on X about Opendoor's new product, framing the problem it solves as FOFO, the fear of finding out. Bane wrote that buying a home is the biggest purchase of our lives and possibly the scariest, not just because of the money but because of the fear of finding out the house isn't what you thought. He pointed to issues like a barking neighbor's dog, unexpected traffic, or simply realizing the home is not right. Bane highlighted the 7-day test drive and 100-day warranty as customer-obsessed ideas built to take the worry out of buying a home. He praised how fast the Opendoor team is executing and congratulated CEO Nejatian and the company. This endorsement matters for several reasons. Bane is not a random influencer. He is a high-credibility operator who helped scale Twitter and has deep ties in the venture capital and technology ecosystem. When someone with his background calls out a company's execution as impressive and customer-obsessed, it sends a signal to other investors, executives, and potential partners. His FOFO framing is sticky. It reframes the problem Opendoor solves in simple, memorable language that can spread beyond the real estate niche. Public praise from a figure like Bane suggests Opendoor's strategy is resonating with tech-savvy observers who understand platform plays and network effects. For shareholders, this is exactly the kind of external validation that can catalyze a shift in narrative. In recent years, Opendoor has been pigeonholed as a risky home flipper vulnerable to housing downturns. The Bain post helps reposition it as a technology company innovating on the home buying experience, with a leadership team executing quickly on customer-centric solutions. Another piece of the puzzle is insider activity. Co-founder Eric Wu recently purchased shares, a move that investors often interpret as a sign of confidence in the company's future. Insider buying does not guarantee stock appreciation, but when it occurs alongside visible product innovation and external endorsements, it strengthens the perception of alignment between management and shareholders. Combining these elements, leadership confidence, innovative customer programs, and external validation, creates a more compelling growth narrative. It suggests Opendoor is not merely reacting to market conditions but proactively shaping its destiny. From an investor's perspective, the Dallas launch and Bain's endorsement do several things. They increase brand awareness, which can drive more buyer and seller leads. They create differentiation from competitors like Zillow and Redfin. They also position Opendoor to capture more market share if the housing market stabilizes or grows. Financially, the test drive and warranty could have upfront costs. However, if they lead to higher conversion rates, lower customer acquisition costs, and fewer post-sale issues, they may improve unit economics over time. This is the classic trade-off between short-term expense and long-term brand equity. For a company like Opendoor, which is still building scale, these investments can pay off significantly if executed well. Technically, the stock holding above $8 and maintaining gains in the aftermarket indicates buyers are stepping in. If volume builds and news flow remains positive, the next area of interest could be the $9 level, followed by $10 as a round-number psychological marker. But as always, investors should watch how fundamentals evolve alongside price action. It's worth zooming out. Opendoor started as an iBuyer focused on instant offers to sellers. Critics labeled it a home flipper. Over the past year, the company has been steadily expanding its offerings, partnerships with agents, mortgage services, and now a buyer program with test drives and warranties. Each of these steps moves Opendoor closer to being a full-service real estate platform. This matters because platform companies enjoy multiple revenue streams, stronger customer relationships, and better data feedback loops. They are also valued differently by the market. A pure home flipper is a cyclical, capital-intensive business. A platform company with embedded services can be a growth story with recurring revenue. The Dallas pilot is an early but important signal of this shift. By highlighting customer pain points like FOFO and solving them in tangible ways, Opendoor is laying the groundwork for brand trust. That trust can translate into repeat business, referrals, and partnerships. Over time, this can create a defensible moat similar to what we've seen in other industries when a company moves from a single transactional model to an ecosystem model. For retail investors following Opendoor, endorsements from figures like Bane serve as a secondary due diligence layer. They show that people with experience scaling complex platforms see value in what the company is doing. This doesn't replace financial analysis, but it can validate the thesis that Opendoor is more than a speculative play on housing cycles. It also broadens the investor base. When a respected tech operator tweets about a company, it can bring in new eyeballs from the tech and venture communities who might not normally follow a real estate transaction business. This can increase demand for the stock and improve liquidity. A measured bullish tone also means acknowledging risks. The Dallas pilot is still a test. We don't yet know conversion rates, customer satisfaction, or cost implications. Rolling out nationwide would require operational excellence. The housing market remains sensitive to interest rates and macroeconomic factors. Execution risk is real. However, the combination of insider buying, product innovation, and external validation tilts the balance toward optimism. Opendoor is showing it can ship new ideas quickly and align them with customer needs. If it continues on this path, the market may begin to re-rate the stock from a distressed asset to a growth story. Opendoor stock closed at $8.06 on Wednesday, up 1.1%, after reaching an intraday high of $8.80. In the aftermarket, it added another cent. More importantly, the company launched a groundbreaking buyer program in Dallas offering a 7-day test drive and a 100-day warranty, directly addressing the fear and uncertainty of home buying. Former Twitter COO Bane publicly praised this initiative, coining the term FOFO, the fear of finding out, and calling Opendoor's approach customer-obsessed. This endorsement adds credibility and visibility to the company's strategy. Combined with insider buying and a clear shift toward platform services, these developments suggest Opendoor is moving beyond its image as a home flipper and toward a more durable growth narrative. For investors, this is a moment to watch closely. Small aftermarket gains may not look dramatic, but they can signal a market digesting positive news and setting up for a bigger move if execution continues. The Dallas pilot could become a template for nationwide expansion. External validation could attract new investor cohorts. Leadership actions show confidence. As always, Do your own due diligence, but recognize the pattern. Innovation plus endorsement plus insider alignment can be a powerful combination. Opendoor is positioning itself to fight FOFO for customers and perhaps also fight skepticism among investors. If it succeeds, today's modest upticks could be the early signs of a larger re-rating. Thank you for watching and staying engaged. What do you think about the 7-day test drive and 100-day warranty? Would you use such a program before buying a home? Drop your thoughts in the comments below. Don't forget to like, subscribe, and share this video with other investors following the real estate tech space. Stocks often turn not when everything looks perfect but when fundamentals improve, even as sentiment is still cautious. This may be one of those inflection points where the pieces start to come together.